The bad news does not seem to be ending for China. April data shows that the country's credit growth shrank for the first time as government bond sales slowed. In addition, loan expansion has been worse than expected, which is a sign of weak demand. Aggregate financing, a broad measure of credit, decreased by almost $27.7 billion in April from the previous month. That's the first time the measure has declined since comparable data began in 2017, reflecting a contraction in financing activity. A breakdown of the data shows that more government bonds were repaid than sold in the month. Contributing to the decline, financing from shadow banking, which refers to activities outside the formal banking system, also recorded a drop, weighing on overall credit. Financial institutions offered over $100 billion of new loans in April, lower than a projected 916 billion yuan. The year-on-year growth rate of outstanding loans edged down to 9.1% from 9.2% in March. The government has sold bonds at a slower than expected pace so far this year, helping fuel a rally in sovereign bonds as demand outpaced supply. China's top leaders at Politburo meeting last month called for faster issuance of special sovereign and local government special bonds, a major source of funding for infrastructure projects. Beijing plans to issue 1 trillion yuan worth of special sovereign bonds this year. China's central bank, too, has also refrained from easing monetary policy in recent weeks to avoid putting more pressure on the yuan and adding fuel to a government bond rally. The central bank has emphasized that markets should not look at the absolute growth rate of credit, adding that slower credit expansion is still sufficient to support the economy. China's top leaders hinted at more space for policy stimulus during a recent meeting. The Communist Party's Politburo vowed at the end of April to make flexible use of tools to help the economy. Authorities are also stepping up their support for the property market, which has been a major drag on the economy and credit growth. But a record cut to a reference rate for mortgages in February has failed to reverse sentiment in the housing market. For all the latest news, download the WION app and subscribe to our YouTube channel.